recently did a video for you guys, and I asked if you would put into comments, what is holding you back from getting the thing that you want in life, right? And so I kind of did like a survey. I wanted to find out what all my subscribers that are listening to me right now, what is it that you really want? What is that? We call it the shiny piece at the end, right? It's the thing that you work so hard for your whole life. Maybe that's getting a higher limit credit card. Maybe that's getting a loan. Maybe that's getting your dream car. Maybe that's getting your dream house. And so when we did the poll over hundreds of thousands of people, we found the number one thing that most people want, if they had a much better, higher credit score, is to get a home, right? And there's a couple things when we're talking about getting a home. You can get a home to live in, which is your primary residence, or you can get a home that you can purchase and you can rent out to collect rental income for as a business for passive income for your future. Okay, so for the purposes of this video, I want to share with you a few myths and things that, most people think that when purchasing a home. And I think why a lot of people don't purchase a home is because they think of these myths and they think, it's difficult, right? Most people think of the purchasing of a home as very difficult, that they can't do it. And so they end up just renting instead of purchasing. And so I want to debunk some of the myths that have been put out there, and ones that'll really just kind of unwind your brain to help you out a lot. So the first thing I want to talk about is that a huge myth that most people think is, I can't buy a house because I don't have money. Okay, so first myth is they're saying, okay, you got to put down 20%. Okay, you do not have to put down 20% of your home value. So I'm going to use easy numbers just for the purposes of this video. I'm going to use $100,000. The myth would be that you would have to put down $20,000 in order to get that home. And so that is a huge myth. You do not have to put down 20% of the total value of the home in order to get approved. There are a few different levels. Level number one is called FHA, okay, Federal Housing Association or Administration. And so the FHA allows the lowest credit score and the lowest down payment, other than what we're going to talk about in a second. So FHA is 3.5% down. So in order to get a home, if you're looking at something around $100,000, you would only need $3,500 down. 3.5% down, and you are in a home. You got $3,500 on a $100,000 house. You can pretty much get a home these days. By the way, as of 2021, we have never in the last 150 years seen interest rates as low as they are right now. So if you ever thought about getting a car, getting a house, today would be the time. You do not want to wait for the inflation. You do not want to wait for the interest rates to go up. You see, the way it works is this. When price homes are high, interest rates are low. When the house value comes down, the interest rates go up. So right now, because right now we all know that there's a huge bubble that's going on that one day may pop, okay? That means that the interest rates are extremely low because house values are skyrocketed, okay? So right now, interest rates are extremely low. So take advantage of it and don't fall into the myth of you got to put down 20% for you to own your first home or any home for that matter. Okay, myth number two, and that is you're going to mess up your credit. Okay, so most people think that when you get a home, it's going to mess with your credit. They're going to be looking at, debt to income ratio, which they will, which I'll talk about in a minute. But it's not going to mess up your credit from the standpoint of inquiries, right? So when you apply for a home, you have what they call a window of opportunity or window shopping. And that means that in a 14-day period, which you have to do your due diligence first, because if you're going to go to a real estate agent to look for a home for you, make sure you do all of your shopping within a 2-week period. And the reason for that is because the way that the system works with the credit bureaus is as long as you shop and get your inquiries within that 14-day period, you're only looking at one inquiry. So you don't get 14 inquiries. They shopped you every day. If they put you out to 500 different lenders to try to get you approved for that home, as long as it's within the 14-day period, you will only get one inquiry. So it's important to make sure that you do your research and due diligence first to go, you know what? All right, here's what I'm looking for. Now you tell your real estate agent, look, here's what I'm looking for. I'm looking at this property, this property, this property, this property. Shop me around. I'm ready to rock and roll. Okay. And then you're looking at only getting one inquiry as long as you do it within that short 2-week period. Okay. So that's myth number 2. I want to make sure you guys know it is not going to mess up your credit. One inquiry off your credit report is somewhere between 3 to 5 points. Okay. So just factor that in as part of the home buying process that you're looking at about a 3 to 5 point drop. Okay. Not a big deal. It's not going to be a 50, 60, 70 point decrease. Now, when you do get your home, okay, there's going to be a slight, once you get approved, there's going to be a slight dip in your credit, but that turns around really quickly and it comes back up. Okay. It's normal when you first buy a home for your credit to dip probably 15 to 25 points. Then as you make your first or second payment, your credit score goes back up. So that's myth number 2. It's not going to affect your credit. Myth number 3 is this. We have been told our whole lives that getting a 30-year mortgage is the best. Okay. Now, if you go back probably over the last 75 years, you do your calculations, you'll see that most people don't live in a home for 30 years. In fact, most people only live in a house for 5 to 7 years. Okay. So what we've been told is when you apply for a mortgage that you should apply for a 30-year fixed mortgage. Okay. It's mostly what everybody gets. But I'm going to I want to share something with you because I think that if you knew about a 5 to 7 year ARM, you would be in a much better position. Number 1, you can get a better home because interest rates are even lower than a 30-year mortgage. Okay, so the big pro to doing a 5 to 7 year ARM is that number 1, you're probably not going to live there for 30 years. Most people don't. And number 2, it lowers your interest rate significantly by going with a 5 to 7 year ARM versus a 30-year fixed payment. Okay, so this is more of a tip of a strategy that I've used over the years, and most people don't know about it. So a 5 to 7 year ARM over a 30-year mortgage is significantly better. I want to share another myth with you guys because I think that a lot of people, this is what holds. Forget the money for a minute. I think this aspect is probably the number 1 thing that holds a lot of people back from getting a house. And that is they feel like their credit score is not going to withstand to be able to get a mortgage. Okay. So first you have to know that they've even lowered the guidelines recently, with assuming because of COVID and everything that's going on in the world, that in order to get a mortgage today, they're going to pull your mid score. They're going to pull a FICO 2 or a FICO 5. These are the 2 bureaus that they're going to pull from. Okay, so it's FICO 2 or FICO 5, not the FICO 8 or 10 for a mortgage. That's generally for loans and that's generally for credit cards. So let's say we're looking at a FICO 5 and your mid score is 525. You have a couple different options. The reason why your score can be lower is because FHA now just lowered their guidelines down to 500. So as long as you have a 500 credit score, there's going to be some cons to this I'm going to share with you. As long as your mid score is 500, you can be approved for FHA. However, because you're at a 500, that is also going to be, they are going to require 10% down of the purchase price. So let's go back for a minute. Let's say you're buying a $100,000 house. You need to put down $10,000. If you are going with the lower criteria of the credit score, it means you got to come $10,000 out of pocket. That's not including closing and or PMI. And you have to carry the PMI through the term of the entire loan. Okay, so FHA is not typically the best, but it is better for people that have high cash, low credit score. That would be an FHA. Okay, so if you got a lot of cash, but you have a low credit score, typically, now I don't know why you would want to do that when it's easy to fix your credit score, but I want to share with you the options. Now it's just a 500 credit score. Now let's look at the regular FHA, and that is 580. So with FHA now, 3.5% down payment. Okay, so let's take a look at this for a minute. 3.5% down payment. So as long as you have a 580 credit score, $100,000 house, $3,500 down. Okay. And it's not going to be required the additional 10%, as long as you have a 580 middle score. Let's move it up to the next one. It's called a conventional, the conventional loan. The conventional loan is a 620 plus. Now, when you're talking about conventional, this is for people that low down payment, well, 5%, okay, but you don't have to carry PMI for a long period of time. That's basically where your massive amount of your payment each month is coming from, is your PMI, right? So that's including the principal and interest, and it's mortgage insurance that you have to carry on an FHA, where you don't have to do that with a conventional loan. Okay, so it's a much better structured loan than going FHA. Okay, now a lot of banks right now are doing first-time home buyer, right? So if you have a local credit union, okay, here in Jacksonville, Florida, we have ViStar, we have Navy Federal, we have Community First. And so a lot of the credit unions, because they are relationship banks, that is going to be my best recommendation for you to go to. Find your local credit union in your area and say, look, I'm a first-time home buyer and I am looking to get my first mortgage for myself and my family. And a lot of programs out there right now that literally 0% down. Okay, because my wife was in the military, we were able to get in our house. Our first house we bought together was $214,000, and we came to the closing table with $100 that actually got refunded back to us because she gave us a gift card for $100 for closing. But 0%. We were through the military. So if you got a military in your family or you're military, they're doing a lot of programs with Navy Federal, USAA, where 0% down. Also, like I said, just a first-time home buyer program. Make sure you ask your local credit union if they have something that is, like a 0% down. Because now you're bypassing the 3.5. Now you're bypassing the 5% down on the FHA and the conventional. Okay. So let's talk about some guidelines real quick, because I know this all sounds real good and you're like, look, I'm ready to go get my house. Okay. In order to get a home, you first have to know that you cannot, which when you look at this, it's kind of ass backwards, but I'm going to share something with you. You cannot have collections or charge-offs. Okay. When they go through underwriting, they are going to make sure that those are paid, right, in good status, and or you do not have collections or charge-offs on your credit report in order to get a loan. Underwriting will not allow that to happen. So that being said, when you're looking at a 500 or a 580 credit score, those debts, collections or charge-offs, have to be paid off in order for you to get the loan. Or, better yet, removed. You have a 500 credit score, the chances of you having a collection or a charge-off on your credit is about 100%. It's very, very unlikely that I have seen anybody with a 500 credit score that has no collections or no charge-off. If you didn't, then you'd be in the 650s to 700s. The reason you're in the 500s is generally because of brand new credit. Even with brand new credit, what we call a thin file or ghost file, you're starting at a 600. Right? So when you get a social security number, what happens is you start at 600, you either go up or down from there. So as you go up, that means you're putting positives on. When you get collections or charge-offs or late payments, your credit score goes down. If you're at the 500, you've either got late payments or you've got collections or charge-offs. Those have to be satisfied before the purchase of your house. Remember, a collection stays on your credit report just like a charge-off, also a late payment, for the next 7 years. So for the next 7 years, once you get it, it will be on your credit report unless you can get it removed. Now, here's another big misconception, because a lot of people think, like, if I just pay my collections off, if I just call the charge-off company and I make my payment to this charge-off and I satisfy it, then guess what? It's going to be removed from my credit. And that can't be further from the truth. That is a absolute myth that people have been telling you. If you pay a charge-off or collection, guess what you now have? You have now verified it, right? So the chances of getting it removed is very unlikely. But also, you now have a paid collection for the next 7 years. Yes, it is satisfied, but it does not get removed from your credit report unless you're able to finagle a relationship with the person who's the creditor and you call them up and you say, look, if I make my payment today in full, I am asking for payment for deletion. It's called a pay for deletion. And what that means is you call them up and you're like, hey, look, I'm sorry, I've got a collection, whatever, I went through a hard time, boom. But what I would like to do is actually make a payment today. But for that, I would like a pay for deletion. So they can send you an email, they can send you a letter, a fax, but you want something in writing. Because if you get it in writing, just in case you go to make the payment and the creditor does not remove that information off your credit report, you have them by the you know what, because you have that letter and or email for written verification saying that if you made your payment, they're going to remove your credit report. So always, before you ever make a payment, I always recommend doing a pay for deletion letter first. Make sure you have that letter, then make your payment. Okay, so let's talk about a 30-year and some of the benefits, because I know a lot of people are like, well, maybe I don't want to go with a 5 to 7 year ARM. I want to go with a 30-year mortgage in place of that. Okay, it is the most popular is the 30-year. I just like the 5 to 7 year better because, again, most people don't stay for 30 years and you get a better interest rate the whole time. And then you can refi after the 7-year period and then also get a better interest rate. So it saves you a lot of money. If you're looking at a 30-year loan, okay, like a typical conventional loan or an FHA, okay, as long as you make one extra payment per year, so that's what we call the 13th month, so 12 months on time, and then on that 12th month, you actually make two payments. So January, February, March, April, May, June, July, August, September, October, November, December, you pay on the 1st and you pay on the 15th every year. Okay, you'll actually save $35,000 and you will take 4 years off of the total loan. So you have a 26-year loan and you save $35,000 in interest alone just by doing that, because you're putting that extra payment towards interest, towards principal only, and there's no interest on your second payment. All right, so there's a little tip, trick thing that you can do if you are looking at the 30-year versus the 15-year. Now, I say all this to tell you this. First thing I want to tell you is don't be afraid to buy a house. Okay, if it is your dream for you to buy a house for yourself, for your family, for your children, it is not something to be scared of. Okay, if you don't try, you can't get it. Right? This is like in anything, like the barking dog gets the bone. So go into your local credit union. Okay, have your credit report ready before you walk in there. Don't walk in there with a 400. Don't walk in there with a 500. I mean, if you're going to go FHA, fine, go FHA. But more than likely, you want to be at a 580 middle, because if you're down to the 500, you're going to have to put down 10% of the total loan. Okay? And if you got it like that, then you're going to buy a $200,000 house. That's a $20,000 down payment plus closing, which is usually around $3,000 to $5,000. Okay, so looking at those options, conventional is going to be your best option. Why? Because if you have a 620 plus, you're not carrying the PMI, and the loan is structured much less. So we got a conventional loan, 30-year, okay, on a $200,000 house. My payment was $1,159 per month on a $200,000 house. So 0% down, 0% closing. Literally, I paid $100. I brought a check for $100 to close. So there's a lot, and this is through Navy Federal. And so there's a lot of opportunity for you guys, especially Navy Federal right now. It's like giving money away. Navy Federal right now, if literally you took anything out of this video, I want to tell you this. Navy Federal right now, I share with you inside the credit game how to actually get into Navy Federal without having a family member, friend, or relationship yourself with or affiliated with any military backing. All right, so I show you the tricks to do that as well. But let me tell you about Navy Federal real quick. The best, hands down bank for loans, vehicles, credit cards, homes. I mean, it's just right now, because the interest rates are so low and because Navy Federal is the largest credit union in the United States, they are like, they're throwing money at people. So if you can get inside with Navy, you got a bank for life. And I teach you how to do all that and structure your credit report so that way when you do get a mortgage and you're looking to get a home, you know what needs to be on your credit report. So that way you're getting the best interest. Because remember, guys, over a 30-year loan, you know how much interest you're paying? Think about that. On a 30-year loan, you're almost paying 2 times the amount of the house. Right? So a lot of people, like you get a $200,000 house, through the term of the 30-year loan, you're probably at $350,000. You're actually paying off $350,000 because of the interest. So lower the interest, the less down payment, obviously the better opportunity for you. And you can get a better house. That's why I always recommend that 5 to 7 year ARM, because the interest rate and your payments are going to be lower each month, which allows you to get a much better home and really still pay the same that you would pay if you did a 30-year. We surveyed what would most people want if they had a great credit score. And most people said a home. So I wanted to do this video to share with you some of the myths, some of the things that you've been told that are not true, and then some of the strategies and things you can use right away. But the most important thing is mentality, is to know that you got this. Okay? Mike from the Credit Game is telling you got this. But first, before you go and start shopping for a home, I do not recommend doing the FHA model, because much higher, you got to carry the PMI all the way through the loan. And it's just the loan's not, you're going to be paying much more for a home. I mean, for example, if you're at a 525 or a 580 credit score and you go get an FHA loan and you're getting a $200,000 house, you're probably going to be somewhere around, I don't know, $1,700 to $1,900 a month for the same house that I was paying $1,100 for. Right? So if you got it like that, you just want to pay the extra $800 a month because of a low credit score over 30 years, guys. Even call it 500. Let's just keep it safe for a minute. I always want to, make sure I conservatively look at it. What if you were paying extra $500 a month on a $200,000 house that I was paying $1,147 a month and you're paying $1,647 a month? Same house. Because that was over $700 and you're at a 580. You see the difference? Right? So the first thing is getting your credit score to a point to where you don't have to sweat it, number one. Low or none on the down payment, and probably the lowest monthly payments you can get. The higher your credit score, those factors play. Okay? So I want to help you with your credit. This is the Credit Game. I structure your credit in 3 ways. Number one is if you've got collections or you've got charge-offs, do not, let me be very clear, pay those. If you got charge-offs on your credit report, do not pay them. Because if you pay them, the likelihood of getting them removed within the next 7 years is slim to none, and none left town. In other words, seeing a snowflake in hell. Probably ain't going to see it. So I want to be very clear. If you pay this, just know what you have to be looking forward to for the next 7 years. You have now a paid collection. All right. Secondly, if you're watching this and you've got late payments, you cannot have a late payment on closing on a house in the last 120 days. So we need to get rid of the late payments. Okay. There's strategies and tricks and all types of things that my vendors do with software to know how to remove late payments in specific years with the COVID letter and specific software to be able to remove it because of something that was inaccurate. Remember, 71% of America has something on their credit report that is inaccurate. So I'm sure there's something on your credit report, most likely, that is inaccurate, whether it's the account numbers or the names or the credit limits, the close date, the open date, the statutes. I mean, all kinds of things that the software my vendor has is able to help you with and help remove it very fast. 2 programs, okay? There's the Associates, which is personal credit. There's the Bachelor's, business credit, which also comes with the Associates. And then you have the Lambo program, okay, which is the Platinum. The main difference is how fast do you want to get to the dance. You're going to drive up in a Maserati, you're going to get there fast. Okay, 90-day results on credit repair. Fastest credit repair on the planet because it is done with software, not letters. Lambo is going to get you in there half the time. There's never been anything on this planet that has been able to even come close with results in 45 days or less. Okay. So first, we need to take a look and dive deep and take a look really at your credit report and be like, okay, cool. The vendor's going to take a look and go, okay, here's what we need to do. You're going to have a consultation. It's going to be about 15 to 20 minutes. They're going to dive deep on what you need to remove, what to basically stage you for that shiny piece at the end. Part two is after your consultation, the credit repair company, okay, my vendor, starts to do surgery on your credit, eliminating the inaccurate, obsolete, unfair, erroneous information on your credit report. Part two, once you come out of credit repair or towards the end, you need to have positives on your credit report, which is my other vendor, which is going to allow you to get 75% off of Tradelines, off competitor prices. Without the Tradelines, there are no credit cards, there are no houses, there are no shiny pieces at the end. Because if you remove everything, even if they were to remove everything, hypothetically, now you have no positives. So you're going to need a primary and you're going to need authorized users, which I'm going to share with you in the course how to get that 75% off instead of paying real competitor prices. Okay, you get 75% off, guys, just being part of the credit game. And the last thing is that I'm going to help you structure your credit report so that you can get that whatever it is at the end. I've partnered with car dealerships, I've partnered with a mortgage company now, and I've partnered with a credit card company. So now we take you all the way through the process, one-stop shop, boom, 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 right there to the end for the best chance of approval you're going to get. I wanted to make it a one-stop shop for you guys so you don't have to go to 3 different places to do everything. We handle it from the beginning where you're at today to having the keys in your hand for your car or your new house. Or maybe you want a $5,000 to $71,000 credit card with 0% interest. We got that option as well. So my name is Mike from the Credit Game. Guys, I want to open up a Lambo program. I was speaking with the vendor this morning. They do have availability for one spot on a Lambo. Again, this is like a once a week kind of thing where I can open up a spot. You guys we do have the Maserati package available, but the Lambo is very exclusive for people that are serious about changing their life. I do not have it like I have with the Maserati because small group of people ready to make a change, looking for results fast, looking to literally like obliterate like their credit. All right. And that's what the Lambo program does. The Maserati is great as well. It's just double the amount of time. It's 90-day results versus 45. Both come with the trade lines and both come with the shiny piece at the end to help you stage your credit report to get you something at the end so you're successful. So when you call in, I need you to say Lambo Mike. Okay, my team knows that Lambo Mike means there's one spot available. They will check with everybody to make sure it's still available. If it is, great. If not, get into the Maserati. We can always get you an upgrade later. But like I said, I want to help you and your family get into that house you want, get into the car you want, or maybe it is that you want the high limit credit cards. I can help you with all of those. But you got to take the first step. The first step means 904-420-7772. I want to say what's up to you as well. My name is Mike from the Credit Game. First come, first serve on this Lambo for today. Take care.